Good evening, everyone. The League of Women Voters welcomes you to a packed house this evening. I guess this is a topic of extreme interest to one and all. It is with great, great pleasure that we welcome you this evening and have our wonderful OBX's own Willo Kelly as our speaker. She is a league member. Thank you very much, Willo. And she has a very prominent role here on the Outer Banks, representing us not only as the Government Affairs Director for the Home Builders and the Association of Realtors, but she's also the president of the coalition of NC20, which represents the 20 coastal counties in our state on issues that are of prime interest to us who live on the coast. So without further ado, Willo.
Thank you, Nancy. It is indeed a pleasure to be here and to see so many people here this evening. This just goes to show again what Nancy stated already, that homeowners insurance is an issue, and the rising cost of homeowners insurance, flood insurance, wind insurance is a very big issue for all of us here, not only in Dare County but in eastern North Carolina. It seems that every time we turn around, we're getting hit with yet another increase request somewhere, somehow. So there's a lot of information to cover here tonight. I have 29 slides. I combined homeowners insurance information and update for you tonight since the rate filing just occurred on Friday for an increase in homeowners insurance. And there's a lot of critical information about flood insurance. We're going to go over some myths, facts, statistics, what the press has been reporting, what you really need to know, and how a law that was passed in 2012 is going to have an impact on all of us. So I'm going to get started. First of all, homeowners insurance, as we all know, it affects the affordability of housing. And we're not talking about real estate interest, development interest. We're talking about being able to afford your mortgage. It's about middle class. It's about, we keep hearing in the media about the widening gap between the haves and have-nots. And I say there's another, that middle there is the trying to hold on to what we have. And I feel this is where insurance plays a critical role in those people that are trying to hold on to what we have. When we turn around and every year we're seeing these increases hit us, it makes owning a home very difficult. And where our American dream is somewhat turning into an American nightmare for some of these folks. So to get started, this I know is pretty difficult to see. It's a breakdown, but I wanted to try to include the Eastern North Carolina territories here. The Currituck, Dare, Hyde, Outer Banks, and the southern Outer Banks areas of Brunswick, Carteret, New Hanover, Onslow, and Pender. The North Carolina Rate Bureau has filed a homeowners insurance increase of 35% for those areas. Last year we were hit with increases as of July 1st when we had public comment period on a rate filing. The commissioner promised us a hearing on this rate filing. He ended up reaching a settlement agreement with the North Carolina Rate Bureau and imposed increases of almost 18% here and almost 20% south of us on the Barrier Island portion. There were smaller increases to take effect on the inland areas of those counties, of which should be. And so we are seeing up there right now, this is what the 35% increase means. And actually, as I'm getting older, I'm going to have to take a look at that and look a little better here. I need my laptop up here. We're looking at almost $2,200 in rate. There's a difference between rate and premium. The North Carolina Rate Bureau submits a filing to the Department of Insurance to establish a rate based on what they feel is needed for $75,000 worth of coverage. Now, I will tell you they are capping this rate increase, and they are being very generous to us because they are saying that our rates really need to go up 121% for them to right here on the Outer Banks and for them to stay in business. You may have seen in the News and Observer this weekend, Ray Evans, who heads up the North Carolina Rate Bureau, said that they needed to come back so soon with a rate increase request because they need to catch up to where they need to be. Where they need to be is 121% increase. They're capping it at 35%. Smaller increases inland, and what they've also done with this rate filing is they've divided some territories The Outer Banks portion, the Currituck Deerhide mainland portion remains the same, but down south of us, they are breaking up the territories a little bit, where actually the very inland areas of Pender County, et cetera, they are requesting a 2.7% decrease, but you can see the 35% increase on the Outer Banks border barrier island portion, and then about a 7.8% increase further inland there, and there at Currituck Deerhide and Hamilton mainland, about I think that's 9.8%. So for those of you that have your homeowner's insurance that you're not even seeing your renewal until June of this year, or between now and June, you haven't even seen the increases from last year. And the Rate Bureau wants these increases to go into effect August of this year. You think about it, $2,100 per $75,000 worth of coverage. If you've got a $150,000 house, what are you paying in homeowners? Now, this is full homeowners coverage. Full homeowners to other people in the state means fire, theft, liability, and wind. So these rates include your wind exclusion rate in this filing. There, I will show you how the impact of if you have a wind-only policy, what it's going to have on you. Next slide. Okay, this is where we are looking at if you have a wind-only policy with the Beach Plan, the North Carolina Insurance Underwriters Association. If you're with Farm Bureau, or if you're with State Farm, and some of these other companies that sent you a letter in the last 2 years that said, we are no longer going to cover you, we are going to drop your coverage unless you go to the Beach Plan for your wind coverage. So many of us, I'd say the majority, have a separate homeowners policy and a separate wind policy. Unfortunately, the legislators were convinced several years back that to keep you from going to the Beach Plan, because as I've argued for 4 years, nobody calls the Beach Plan office and asks for coverage, you pay an additional 5% on your wind policy. You are surcharged. In my opinion, that surcharge should go away, because nobody calls the Beach Plan and asks for coverage. We're told that's where we have to go. But they need the additional revenue, they say 5%. If by chance, for some reason, you cannot find homeowners insurance anywhere else, then you can go to the Beach Plan for full homeowners, and you're charged an extra 15% on top of the rate for a full homeowners policy. So these rate increases have an additional burden on those that have wind-only policies and full homeowners in the Beach Plan. And they have the wind exclusion broken down in the rate filing. So out of that $2,178 for the Dare Outer Banks, $1,885 of that rate is for wind only. So the largest portion of this and the burden that's going to take place is on the wind. And so you're going to see, if this goes through, dramatic increase in your wind. And I've got the difference in dollar value up there. And what that means with the surcharge is you're not paying just $1,885. You're paying actually $1,979 in wind rate for $75,000 worth of coverage. Now, the indicated rate for the Dare Outer Banks is $3,600. I told you they wanted a 121% increase. I'm not showing you that up there, but when we get into talking points and whatnot that were handed out, this was, a document that was over 1,100 pages that was just released at 5 o'clock on Friday. So I've been very busy reading. I will tell you, out of the $3,600 that they say we need, $1,000 of that is a base loss cost. The other $2,600 is for profit, expenses, their cost for reinsurance, there's a deviation factor, et cetera. So we're going to have a big conversation with our insurance commissioner about why less than 28% of the rate they request is actually for losses. So that's how the rate is established. All right, next slide. Let's move right along. I like to show this. This is actually a map from NOAA. And after the 2012 rate filing, or during that process of the 2012 rate filing, NOAA published this map. And this is a map that shows catastrophic weather events in the state of North Carolina. And you will see red are tornadoes, green is hail reports, blue is wind reports. look at the severe wind reports in the state of North Carolina. And that is through, I believe, it was like through the end of 2012. If not, it was 2011, but I can give you an update on that and we can get that posted on the web. I like to show that because that is from NOAA. Look at all those severe weather events on the coast. All right, next one. And I always like to bring this up because back in 2008, the Outer Banks Association of Realtors, the Outer Banks Home Builders Association, in joining the coalition with NC20, we didn't know what we were doing when we went to the General Assembly, and we talked to our legislators, our elected officials about, why we're so upset about homeowners insurance. Yes, we don't want to pay more, but every time we turn around, we're getting a rate increase. Not until 2009 when we were able to ask specific questions, and we were learning as we went along. So we know a whole lot more now than we did back in 2009, trust me. We found out that Charlotte and 32 other counties in the state of North Carolina had not had an increase in their homeowners insurance rate since 1993. For almost 20 years, 1/3 of the state and the city of Charlotte had not seen an increase in their homeowners insurance rate. Now, last year, I can't say that anymore because last year there was like a small, percentage increase. But to compare rates from 1993 to 2014 as what's requested, Charlotte is going from $351, and if they get what's requested in this rate filing, they'll be paying $436. We have went from $578 to $2,178 for the same amount of coverage in the same amount of time. So to me, that's a little skewed, and with all of the losses that have occurred, and we've tracked losses, we've looked through the rate filing, we feel that these increases are unwarranted and unjustified. They're discriminatory against the coast. I kind of summed it up as well. That's where the voters are, and that's where the rates have been kept low, and I can say that, and I've said it publicly without anybody being too mad at me. So it just seems obvious that when you look at the places where the voters are, it seems that the rates have really been kept low there when they have experienced losses. After Hurricane Hugo, rates did not go up in Charlotte. After Hurricane Fran, I did not see rates go up in Charlotte. So it can't be just because of losses. We pay a rate based on modeled risk. We had an expert tell us in the last rate filing in 2012 that the wind speeds used in the modeling to determine our risk of hurricane loss, the wind speeds used were illegal, that they were incorrect. The Department of Insurance was notified of this. To me, that should have made the whole rate filing null and void. But when the insurance commissioner reaches a settlement agreement, there needs to be no justification for how he reached that settlement. He basically said, the insurance company said they'll stop writing in North Carolina if they did not get higher rate. So, moving along. All right, before I get to flood insurance, you were passed out. If you didn't get it, it'll be up here. This is very, very important. Interestingly enough, with an 11 to 1,300 page document, the last rate filing was 1,300 pages, we have 30 days to comment on what is included in that rate filing. And it is very difficult to read. There are a lot of territory numbers that you have to know what they mean, et cetera, et cetera. This is a list of what I've been able to put together in the last few days on what is in this rate filing. At the bottom, there is information that the Department of Insurance is accepting written comments on the homeowner insurance rate filing through January 31st. So today's January 9th, folks. If you've got an email, please take the time. Last time we got 8,000 comments. It's time we all come together and work on this together and start submitting comments. Email at 2014homeowners@ncdoi.gov. Here's a whole list of what you can put in your email. I think the first and foremost that's the bulleted item, there has not been a hearing. Now, if the insurance commissioner says, I deny this hearing, I deny this filing, I will call for hearing, it is not a public hearing in that the public can go and make comments. The only time you have to comment on this rate filing is until January 31st. You will have no other time to submit comment after January 31st. If the commissioner calls for hearing, the the whole situation, it will be like a trial. The Department of Insurance will bring forth witnesses and say why they don't agree with the rate filing. The North Carolina Rate Bureau will bring forth witnesses and testimony as to why the rate filing is justified. So it is very important that everyone is aware you have no other opportunity after January 31st to comment on this rate filing. There has not been a hearing, a full hearing, scrutiny of a homeowner's insurance rate filing since 1993. I think since it's been 20 years, we have all of this new data on modeling, et cetera, technology being used. I think it's time that the public deserves more transparency of the process and full scrutiny of a homeowner's insurance rate filing. We need to know how they come up with the numbers they come up with, and a hearing would give us that opportunity. We can attend, we won't be able to say anything, but we certainly can be providing input to the Department of Insurance along the way as to how we feel about the process. So take the time and do that, and everybody in here, since we've got a packed house, everybody's going to email the Department of Insurance tomorrow. You got your homework, it's right here, and whoever didn't get a copy, there's more right up here. All right, that was 17 minutes on homeowners insurance. Wow. Now we're going to start on flood insurance. The impact of Biggert-Waters Flood Insurance Reform Act of 2012. Many of you may be thinking this isn't going to affect me. I've been reading the paper, I've gotten letters from my insurance agent who said 80% of the policyholders are not going to be affected by this bill. It is going to affect all of us. If not this year, it will be affecting us in the future. Maxine Waters, Congresswoman from California, co-authored this bill. Well, let's just say her name was on the bill. I don't think she was actually the author of the bill. There's a huge coalition out there called smartersafer.org. Eli Lair is involved with that. He stated in a meeting in DC that he was responsible for writing this bill. Coalition members include our dear friends, Defenders of Wildlife, the National Wildlife Federation, et cetera, et cetera. There's some insurance companies included in this coalition. There are reinsurance companies included in this coalition. And they have put the spin on it that, of course, the flood insurance program is broke. We need we need smarter policy when it comes to looking at how the flood insurance program is operating. And, we are in the hole. But I'm going to give you a little bit of the rest of the story. If any of you are familiar with Paul Harvey, love Paul Harvey, loved Paul Harvey. Now we're going to know the rest of the story. So let's talk about the impact of Biggert-Waters. Next one. We do have to go over a few acronyms. Biggert-Waters was passed in July 2012. The National Flood Insurance Program falls under the Department of Homeland Security because FEMA falls under the Department of Homeland Security, and FEMA administers the National Flood Insurance Program. There's a couple websites up there if you'd like to take note of that. We, in talking about flood insurance and the impact and when these certain provisions of Biggert-Waters take effect, you're going to hear discussion on pre-firm houses and post-firm houses. A firm is a flood insurance rate map. Pre-firm means that a structure existed prior to flood insurance rating maps becoming effective. And here on the Outer Banks, depending upon the town, it's somewhere around the late 70s, and I've even heard in some cases 80, 81. So if you have a structure that was built prior to that, you're going to fall under a different set of rules and be impacted by Biggert-Waters different. If you built to a flood map standard, you are going to be impacted by Biggert-Waters. If you played by the rules, if you did what the government told you, you are post-firm, you are still going to be impacted. Any policyholder, any homeowner that has a structure in a special flood hazard area will need to have flood insurance if they have a mortgage. The CRS is the community rating system. There are ways that communities can earn certain points. Each year FEMA puts out, or every so many years, a community rating system manual. The 2013 rating system manual was based on three things: climate change, future conditions, and sea level rise. And so some communities have lost points while they've gained points in other areas. Dare County just had to look at this situation where they were losing points, had to make up a difference somewhere just to keep their 10% discount. So you will hear possibly in your town council, board of commissioners meetings where communities are looking at how they can earn points through the community rating system. BW12, that's just the acronym there for Biggert-Waters Act of 2012. WYOs, they're the write your own companies. Even though FEMA administers the National Flood Insurance Program, the operations and administration of the National Flood Insurance Program was turned over to 90 companies, insurance companies, that write flood insurance through the NFIP and for FEMA. So they're actually the ones you go to. They're the ones that administer the policies. And NMG, get used to this. No more grandfathering. We'll talk more about that. And I did have another one down there, the little asterisk that's my acronym, OMG. OMG, it's what we're all going to be saying at the end of this meeting. All right. There's our lesson on flood insurance acronyms. Zones. If we are in a flood zone, we are in a zone and we have a BFE, base flood elevation. Our VE zones here on the coast, we have VE, not just V. They're your highest velocity zones for water. They're your highest risk zones. A zones behind usually the B zones. We have V zones on the sound and also on the ocean front. A zones typically behind. X zones, you're outside the special flood hazard area, but you can still purchase flood insurance at preferred risk. Okay, here's how the National Flood Insurance Program came about. We keep hearing about, climate change, severe weather events. Well, in the 60s, there were severe flooding events. There was Hurricane Betsy that occurred, I believe it was 1965. It hit almost 40 years and 2 weeks to the day of Hurricane Katrina, Louisiana. Wiped out 169,000 homes. I think it killed around 78 people. Devastating flooding event. At that time, people had to rely on their neighbors. They had to rely on family, friends to help them get through a catastrophic event like that. There was no insurance for flood. So the private market said, we can't do this. It is the most costly and the most prevalent natural disaster risk in the United States. We cannot cover it. So what happened in 1968, Congress authorized the National Flood Insurance Program in an attempt to reduce property losses from flooding and also encourage spending to mitigate flood hazard. They looked at ways to compensate disaster victims. This is separate from FEMA. Now we all know FEMA, the Federal Emergency Management Agency. This is National Flood Insurance Program where people are buying insurance for flood. The Insurance Act, NFI, the National Flood Insurance Act of 1968 mandates, and it is still a mandate, that coverage be widely available and coverage be affordable. And I think you're going to hear soon, maybe we need to redefine affordable. FEMA administers the NFIP, sets rates based on a 100-year floodplain, a 1% risk of flooding in a particular year. And then 52%, I like this is another NOAA map, I don't have the map up there, but 52% of the U.S. population lives within 50 miles of a watershed area. So this is not just a coastal issue. This is a nationwide issue, and Biggert-Waters is having impacts in South Dakota, West Virginia, all over the country. A few stats and facts, we all like some numbers. How many people are we talking about? How much money comes in? It is required flood insurance on federally backed mortgages. So who is this going to affect? The changes, the increases, the astronomical increases we're hearing in premium, it's going to affect your mortgage holders. So 22,000 communities in all the United States and territories participate in the NFIP. There's about 5.6 million policyholders. Out of that, there's 1.2 trillion in exposure. That's structure and contents. And please understand this. When you have coverage in the national, if you have a flood insurance policy, you have a limit of $250,000 for residential and a limit of $500,000 for commercial. So when you're reading in the paper and hearing on the news and watching some of these, talking heads on TV about, oh my gosh, these big, huge houses, doesn't matter. Size doesn't matter in the National Flood Insurance Program. Whether you got a house in Pine Island or you're in Collington, $250,000 is your limit of coverage. So we need to get off of the debate about vacation homes, rental homes, big houses. Their perception is everybody that lives here is in a big, huge mansion, et cetera, et cetera. Doesn't matter. You only get $250,000 worth of coverage. So when we start talking about some of these impacts and where we're hearing premiums of $30,000 a year, $20,000 a year, how in the heck can they come up with a premium like that when you only have $250,000 worth of coverage? The NFIP was never required to have statutory reserves, not like an insurance company, because the U.S. Treasury backs it up. Because if there's a disaster and policyholders have more claims than what's in there to pay in any given year, you got the whole U.S. Treasury to back you up. That's the best reinsurance as anything. If the U.S. Treasury can't back up the flood insurance program, then we've got problems. So they were never required to have statutory reserves. From 1978 through 2012, the NFIP has collected $6 billion more in premiums than claims paid. That's after Hurricane Irene, that's after Hurricane Sandy, the end of 2012. That's just looking at premiums versus claims paid. And when it comes to homeowners insurance and what we pay, that's what we want to know. How much did you take in premiums and how much were our losses? Unfortunately, there's a lot of other costs associated with the National Flood Insurance Program when it comes to administrative costs and overhead. Et cetera, et cetera. There's been interest payments on the debt to Katrina, which have totaled up to $900 million a year. We're only collecting $3.5 billion a year. So you can see where the program is kind of set up to fail with those kind of high interest payments. All right. Here's a little bit about the write your own companies and again the 90 companies. This does not always trickle down to those independent agents writing coverage, so do not think this is what they make. But the Write Your Own program, it was created in 1983. It allows companies to write and service the NFIP. More than 1/3 of NFI premiums collected goes to the companies. So we have an issue there that the Congressional Budget Office has been stating since Katrina. We need to look at the overall operations, cost and efficiency of the program. That is not addressed in Biggert-Waters where it should have been. They are looking into that. So go ahead. History of the NFIP. The NFIP was financially sound for over 3 decades. Yes, local communities, towns, governments enacted floodplain ordinances to better mitigate flood hazards. And then all of a sudden, 2005, the game changer. We had 3 huge hurricanes and hit the Gulf Coast. Hurricane Katrina, you had Hurricane Rita, Hurricane Wilma. Forced the NFIP to borrow $21 billion from the U.S. Treasury. The program's insolvency was blamed on 4 major flaws. You are not charging, they say the NFIP was not charging full risk-based premiums for all properties. Well, that's true. There have been repetitive loss properties. That's true. There are those in the Gulf Coast that have actually had maybe an $80,000 house and they've collected over $400,000 in flood insurance claims. That's a problem. Mapping, we have had communities in the United States that have not had flood maps updated for 20 years. That's a problem. And then you've got some residual risk properties. The National Flood Insurance Program prior to Biggert-Waters, and actually it was not included in Biggert-Waters. There was an attempt to try to get those communities that were behind levees, trying to get them forced to pay flood insurance and make it mandatory, but due to some political lobbying, they are still exempt. If you have a flood control structure, a levee or a dam that meets a 100-year floodplain, you do not have to buy flood insurance. And I would like to remind 2005 Hurricane Katrina, a lot of those losses, I would say the majority, were due to the failure of a man-made structure. And we are all going to be paying for that. Next slide. Here's my lovely little chart that I like to show everybody. This is right from FEMA. National Flood Insurance Premiums versus Payouts. 30 years, going pretty good. Bam, bottom dropped out in 2005, and we've been doing pretty good since then. Sandy probably put a hurting on it, but I will tell you this. We were given data that 30% of the policyholder, or actually 30% of the structures, the homeowners, that were affected in Sandy had flood insurance. 70% did not have flood insurance. We have asked FEMA, that big huge red bar right there, if all of those losses that they are saying was attributable to NFIP policyholders, were they policyholders in the National Flood Insurance Program? And I was told yes. 2 months later, this was in Washington, D.C. last year, 2 months later I found out that FEMA would come into a community and offer flood insurance to folks when they had a loss, and allowed them to sign up for flood insurance after they had a loss, and if they would sign an affidavit that they would continue their policy as long as they had their structure. So they didn't lie to me, but they didn't exactly tell me the rest of the story. So we have asked FEMA, we have given questions to our Congressman Jones, we have presented information to the National Association of Realtors, the National Association of Home Builders, where we want certain questions answered. The public needs to know how much of that debt is due specifically to the failure of the levee there in New Orleans, how much of that debt in Katrina is due to post-catastrophe policyholders. We have not yet gotten that information back. So keep that in mind. Next one. Biggert-Waters Act of 2012. I'll tell you what, there were a lot of folks in DC that were pushing hard for passage of Biggert-Waters. Our associations, our national lobbying associations, Home Builders, Realtors, all behind Biggert-Waters. You had your environmental lobby here, you know, your real estate, home builder industry, this, and this, because what were we doing for like 4 or 5 years, and well, actually since Hurricane Katrina, we were jumping through hoops with Congress every year to see if the National Flood Insurance Program would be reauthorized. And they would give it an extension. And all these mortgages were hanging in the balance and couldn't close because the National Flood Insurance Program had not been reauthorized. So the good news was that they knew this bill was going to reauthorize the flood insurance program for 5 years. That they knew this is what we needed to support. When we went to DC, support Biggert-Waters, tell your congressmen, tell your senators that they need to support Biggert-Waters. Well, the fine print, there's a whole lot more to it than just the reauthorization. So good news is reauthorizes the flood insurance program. We don't have to worry about it, but are we really going to care after we get hit with what's coming? So next one. Flood insurance rates. We all know your flood insurance rates based on your base flood elevation and your flood zone. We were told that Biggert-Waters 12 will make the NFIP more financially stable by raising rates to reflect, and I put it in italics, true actuarial flood risk. We have a big question there about what is true actuarial flood risk. FEMA reports right now that 78% of policyholders already pay actuarial premiums because they don't get a discount on their flood insurance. True risk is debated, like I said, but currently, you'll see FEMA sent something out and stated that as of 12/31/12, you know, 81% of policyholders aren't going to be affected by Biggert-Waters. Well, that was as of 12/31/12. Et cetera, et cetera. Consideration will now be given to historical loss data, including catastrophic loss years. So all those losses from Katrina, they take all of the losses into account and say, okay, here's our loss year, including those devastating outlier catastrophic events like Katrina and Sandy, and then factor that into establishing an actuarial flood risk rate. They are also going to be looking at additional factors such as storm surge and climate change. All right. Here's what happened as of January 1st, 2013. I hate the word subsidized, and you're going to see where I've scratched it out in other places on this presentation. Subsidized. Subsidized does not mean the government is paying anyone's flood insurance. Does anybody do any farming? Farm subsidies, you do get money like for your insurance and losses and that. No, there are no monies given to make up the difference. There's no money given to FEMA, no money given to the NFIP to pay anybody's flood insurance premium. All the term subsidy means in the National Flood Insurance Program is discounted. So if you had a house and the government comes along and says, we've now established this flood insurance program. We want you to participate in the program, but we know you're already here. We can't make you, so we're going to discount this insurance for you, a big deal because you were already in existence. So in order to encourage you to participate in the program, these folks that owned houses prior to the flood maps becoming effective, your pre-firm policyholders, got discounts. So there was a lot of debate in Congress about primary residences and second homes. Senator Tom Coburn from Oklahoma, if you can afford a second home, then you can pay more for your flood insurance. If you have a vacation rental home, then you should pay more for flood insurance. So as of January 1st, 2013, non-primary residences that are pre-firm, So they're not even the ones that have been built since flood maps became effective. They're going to see 25% of their increase until they reach their actuarial risk rate. Now, there they define what a non-primary residence is. Only 20% of the policyholders are pre-firm, and when you get to second homes, this is why this made no sense and why the argument was allowed to continue much longer than it should have been. Only 5% are second home policyholders. Second home policyholders that are pre-firm. We're going to get into coverage on those also. Next one. Then we roll around, and it's October 1st. This is where a lot bigger kind of impact. This is for everybody. This is 10/1/13. The NFIP operates on a fiscal year, October 1 to September 30th. So as of October 1, everybody, except for those pre-firm second home people, everybody in a B zone is going to see 11% increase if it's post-firm, 17% increase if it's pre-firm. So those are your primary resident policyholders pre-firm. AE zones, you can see the 6 to 16% increase. So if you're getting your flood insurance renewal, you're seeing an increase. Biggert-Waters allowed the cap on increases for rates to change from 10 to 20%. So instead of where the NFIP can only go up 10% a year on your rate for flood insurance, they can now go up to 20 every year. So Biggert-Waters allowed that. It also mandates that we start building a reserve fund to pay for some of these possible catastrophic losses. There'll be new application forms and elevation requirements. No extension of discounts to new or lapsed policies, and that's how we're being affected right now, because if someone goes to buy a home and there's not an existing flood policy in force, and MAPS changed that zone in 2006, it might have been built in 2005. We have an example in Avon, 3 rows back from the Sound, $189,000 for the house and the land. It was in an A zone when it was built. This is in 2005. This is not an old home. The zone changed in 2006. Biggert-Waters said, no more grandfathering. NMG, no more grandfathering. You now have to pay to whatever the latest map says. And so, new buyer went to go look for flood insurance. The former owner paid $1,200. The house had gone into foreclosure. The bank didn't carry any coverage. $15,000. On $189,000 structure and land.
I sold that house. I can tell you the rest of the story.
There you go. I have a witness and testimony right here. Say amen.
Well, it was a Freddie Mac foreclosure property, so they had it listed at $189,000 when that buyer discovered the cost of flood insurance. We as taxpayers took a hit on the loan price. They dropped it down to $149,900. And then my clients jumped in and bought it, paid cash, didn't get a flood policy or weren't planning to. So we took a hit on the sales price. And we're also looking at the flood problem. So my folks will retrofit it once the, everything becomes new maps, et cetera, and then we'll figure it out. But it costs the taxpayers $40,000 in sales price for that little.
The ripple effect is, now that's a comp for a future sale in the neighborhood. You're looking at the ripple effect of that being not only people being, well, we're going to get hit when the new maps come out, but you're looking at lower tax revenues, local tax revenues when your property values decline. And the higher your cost of insurance, the lower your property value. And there's a formula done by some university, and I can't think of it off the top of my head, but for every $1,000 more you pay in insurance, how much it lowers the value of your property. So no extension of discounts on those pre-firm houses, or if you have a lapse policy, and then we'll get into the commercial properties as well of what's happening. So right now what we're feeling here on the Outer Banks is if there's a sale and there's not a flood insurance policy in place, if there's been a foreclosure and no flood insurance policy in place, if somebody let their policy lapse and they try to go get a new policy thinking they're going to keep that same discount or that same amount of coverage, they're being shocked. We have someone that serves on the real estate commission whose mother-in-law let that happen in Thicket Lump, was told $20,000 for flood insurance to refinance. If you want to refinance, that's another issue as well. If you got to refinance your property and you have to get a new flood insurance policy. All right. Also, as of 10/1, here's what happens. Again, I crossed out subsidized. Rates to increase 25% a year. For other discounted commercial properties, severe repetitive loss properties, we know that's a problem. Properties that have incurred flood-related damages where claims exceed fair market value. Full risk rates will also apply to policies for newly purchased property. Right now, if there's no policy in place, you're going to be able to grandfather the policy until the new maps come out, but that's going to be this year. Also, Biggert-Waters had a strange provision that if you bought a house after July 6th, when Biggert-Waters became effective, and it was an older home, all of a sudden, after October 1, you were paying $800, $900 for a flood insurance policy. After October 1 of this year, you're getting a renewal which could be thousands of dollars. That they make the automatic jump. Now, no realtor could have disclosed that because we were not aware of it and nobody knew about it until this year. So when I get to the end here and I ask for examples, if anybody's got any examples they can share with me of how this has impacted them, we need to get them to our senators and our congressmen. Okay, next slide. Is everybody with me so far? Lots of good news tonight. Okay, severe repetitive loss properties. We have sent our congressional representatives information that if FEMA would have focused on this one issue, looked at new mapping for communities, and a couple other issues with the cost and efficiency of the program, if 1/3 of all of your properties, or I'm sorry, 1% of all your properties account for 1/3 of your losses, maybe that's where we should start. Maybe that's where we should start looking at where we can improve things with the National Flood Insurance Program. 90% of those severe repetitive loss properties are older homes. So when we see all this damage in Sandy with houses built on slabs in the 50s and 60s, they never tell us the date of the houses. I mean, we've got people that serve on the task force and emergency crews that go out after a disaster and look at these houses, and it's the older houses that are suffering the damage. So if they would have addressed that one issue, that would have gone a long way, I think, to shoring up the National Flood Insurance Program. There's just some numbers for you. Total average payment on the property and severe loss is about $54,000. Very rarely do you have a total loss of $250,000 in the flood insurance program. The majority of losses, it's not like your car, if it's flooded, it's totaled. Your house, usually when it floods, water comes up and you've got water in your first floor. Doesn't usually destroy your house. What happened in Sandy in the pictures, you know, they like to show from Katrina, devastating, but typically it's small average losses. Okay, we're getting to the end. Reform changes in Biggert-Waters. There's another provision, section 207, which says, we don't care how you built your house. We don't care how you built your house in the past. We don't care if you built to what we told you to build to. If the risk changes, you just need to pay more. So that house in Avon that went from an A zone to a B zone, $1,250 to $15,000 a year, it could happen to you. It could happen to you if you already know in 2006 there was major changes with zones in 2006. I think about all those houses up in Corolla that were built in a C zone, oceanfront, first floor, not allowed to have them in a B zone. Oh my gosh, the elevation on those houses is going to be way below base flood. They're going to get hit enormously when these new maps come out. Now, new maps are supposed to come out, preliminary maps are supposed to be out in Dare County later this year. So the premium rates for you, primary residents, mortgage holder, living here, working here year-round, retired here, you will be affected if your zone or elevation changes. The good news is John Dorman with North Carolina Floodplain Mapping is telling me that it's not going to be that bad. Base flood elevations may actually be going down. I don't know about the zones. So we don't know until the maps come out just how this is going to affect us. But the major change in Biggert-Waters that is going to affect the 81% of policyholders is when maps change. Now herein lies another problem. It's not this year when new maps come out. If we get maps updated in 7 years, you could be in a house built to the standard today and the maps change in 7 years. You're going to get hit again. So you always have to be this is just one of the most incredible things that Congress could have done, is that they've passed a law which new maps have just become effective in Louisiana, Alabama, New Jersey. They're seeing new mapping. We're seeing premiums for folks that are living in their homes year round and are 10 years in a mortgage that where the flood insurance is so high, they would have never qualified for their mortgage. They can't pay it. So and what do you do if you can't pay it? Then you get forced place coverage, or you try to find coverage somewhere else. But this is what this is going to do. This is going to cause people, even if it causes one family to be forced out of their home because of the cost of flood insurance, it's one too many. Even if you build to the minimum standards today, you'll be subject to significant rate increases upon remapping if your flood risk changes in the future. So you're never safe. At least under the program before Biggert-Waters, you knew you were safe. You knew this is what you paid to. You built the way you were supposed to. And our poor builders, how are they supposed to know? How am I supposed to build this house back? How am I supposed to, to build? You want to tell your folks, we're going to have to build higher. We're going to have to look at height restrictions. I mean, it's coming. All right. Other NFIP changes, I've already talked about the increase on the rate cap from 10 to 20% a year. There's certain rules for lenders now. There are increased deductibles. Next slide. New flood maps, DARE's preliminary maps. First we were told early 2014, middle 2014. They're saying now sometime late 2014. Currituck will be a little bit ahead of Dare County. I've gotten some preliminary information on Currituck maps. In the new maps, there's going to be a new zone called the Coastal A Zone. We have been told and promised that there will not be a rate associated with the Coastal A Zone, but there will be building standards in a Coastal A Zone, which you will have to build to a V Zone standard. So we don't know if that's going to make you non-conforming, and now if you're not built to a V Zone standard, are you going to be penalized? This could affect all soundfront property owners. Typically, they say the Coastal A Zone is going to be behind the V Zone, but it's based on a limit of wave action, and it could affect all soundfront property owners. This is another good one. It's like, does the news get any better? There's a Technical Mapping Advisory Council, which is being implemented here that would advise FEMA on improving accuracy, mapping, map maintenance, funding needs, strategy, etc. It's also supposed to develop recommendations for future conditions, including the impacts of sea level rise to determine rates. And I know you've probably heard in the news, North Carolina not taking a stand and adopting an official sea level rise. There's a lot of background information on this, and this is part of it. That North Carolina is one of the, I think we're the only state that has not sent in an official sea level rise rate to FEMA. And this is one of the reasons. Because if the Technical Mapping Advisory Council says, well, every state agrees that there's going to be 39 inches of sea level, what does that do when we're looking at floodplain mapping? So we're going to add base flood elevation that gets higher. Storm surge data looks higher. Not that we should not mitigate the effects of flood hazard. We do. We build to one of the strongest building codes in the country. We have the second oldest building code in the country. We have setback rules. We have all other kinds of rules when it comes to building that other states, Mississippi, I don't even think had a building code when Katrina hit. So we have done a great job of mitigating flood hazards. So that's why we've been a little bit more cautious when it comes to just jumping in on the bandwagon and saying, yes, this is what we agree with. So there's a lot more impact to it than a lot of people realize. Next. Here's what you can do. You can be very proactive. I'm not sure what your insurance agent can tell you today as to how the new maps are going to affect you. You may already have an elevation certificate and you know you're in a different zone. When the maps came out in 2006, you might ask, how is this going to affect me? What's Biggert-Waters going to do to me? I always like to remind people, you want to save money on your homeowner's insurance and your flood insurance. Well, flood insurance policy is a little different with their limits. But if you notice on your homeowner's insurance policy, there is one number, and it's called the dwelling value. The dwelling value on your policy determines the premium you pay. Don't worry about other lines of coverage. Don't worry about personal property. Don't worry about loss of use. Those are all percentages of the total dwelling value. So if you've got a $100,000 dwelling value, that should be only the amount to rebuild your home within the policy year. That amount should only be the cost to rebuild your structure within 1 year. It's not market value. It's not structure and land. It's not tax value. You can probably ask a builder, give them a couple $100, come over and say, hey, can you give me an estimate on what it would cost to rebuild my house? That's the number that the insurance company uses to determine your premium. Everything else is based on that one number. That one number determines your premium. That one number determines your deductible. If you have a 1% deductible and you have a $100,000 policy and you have wind damage, you will pay a $1,000 deductible. But here's where you may be paying a whole lot more. You have $100,000. Insurance companies apply an inflation rate factor to your policy every year. And when the investment market was down, we had seen in the past 5 years where companies have applied inflation rate factors as high as 12 to 14%. So guess what? Your $100,000 policy after that first year becomes $112,000. The next year you're not paying attention, it's now $124,000, and so on and so on. After 5 years, your dwelling value could be over $150,000. Your deductible, which would have been $1,000 if it maintained the building cost at $100,000 to rebuild, then becomes $1,500, and your premium is higher. So check the dwelling value, discuss this with your agent. They're there to help you, and we have some great people on this beach that work in the insurance industry. So check that dwelling value. I probably just saved you a whole bunch of money today. So check that dwelling value. That is the only number you need to know. The National Association of Insurance Commissioners publish a handbook on understanding your homeowner's insurance. It is in there. So we have argued the point of kind of artificially high inflation rate factors, but it is a number that the insurance companies can use. There's no legislation that regulates the inflation rate factor. So get a new elevation certificate. You may, after new maps come out to the better. You may be a pre-firm home that's being charged this rate based on what they think your elevation is. If you have an elevation certificate, you may actually find out that your elevation is better than you thought. So this will determine your rate for flood insurance. Higher deductibles might lower your premium. I put this in parentheses, or I put this in quotes because this is in FEMA's guidebook. Consider just remodeling or rebuilding your house. Just, do away with it and start all over. Build higher, no problem. They don't understand how it's not that easy just to, raise your house. Check your vents on your foundation. You can get, discounts for that and make sure they're the right vents. So if you talk to your surveyor and ask them, well, you're telling me it's going to be this, is there anything else I can do, and talk to your agent, they may be able to help you. We are working here in Dare County and Currituck County on community-wide mitigation steps, working through the community rating system. Every town is working on that. I need your input and feedback. I have established a Gmail email address, ncinsurancehelp@gmail.com. If you have any questions, if you have examples of flood insurance issues that we can share with our legislators, please email me and let me know. I've looked at several policies over the last 5 years, and they've been interesting, let me tell you. And so if you just want to send me an email with some information. Another thing about flood insurance, and I thought I saw the gentleman in the room, so he'll probably raise his hand and say, he can be a witness too. Flood insurance. After Hurricane Irene here, we had adjusters from the National Flood Insurance Program going through communities, and in one particular instance, this gentleman said, well, he knocked on the door, understand you got some flood damage, sure, come back, look. None of your damage is going to be covered. Okay, no problem. No claim filed, no money, etc. He gets his flood insurance renewal several months later. Bam, skyrocketing, high. Calls his agent. Agent says, you had a claim. No, I didn't. Yes, you did. It says here you had a claim. No, I didn't. I filed no paperwork. I submitted no information. I signed no documents. I got no money. I did not get any money from the National Flood Insurance Program. Well, I'm going to have to check into it. So it goes along. And Ed, if you're here, you can swear to it. Yes. Ed is right here. Ed, what happened?
After I called them a couple times about why would you raise my rate when I never got any money back and you didn't pay me anything, they said, it doesn't matter. As soon as you call us and ask for us to come out to look at your property, that's a claim. Whether we pay you any money or not, it's a claim. So don't ever call them. And they didn't cover anything that was damaged in my house during Irene anyway, but they raised my rates. So
So if that, for those of us in fortunate situations where we don't have a mortgage, we just say the heck with it, I'm not paying it, but most of us do not have that option. ncinsurancehelp@gmail.com. Next one, real quick, let's wrap this up. We're doing good. We got time for questions. I like to say what Congress didn't know when they voted for Biggert-Waters. I just think there was all these lobbying efforts in DC to say, we gotta get this passed, we gotta get this passed. I had told my colleagues in DC, when you had an environmental lobbyist over here, and you had the insurance guy here, and you're working on real estate and development, and you're all on the same page, maybe you should have taken a step back. So they now look at me like, that's a good point. Well, maybe we should have. Anyway, second home debate, moot point. Here's what Congress did not know when they're arguing about second homes and saying second homes have to pay more. If you have a second home policy, you're paying more already. Did you know that second home policies, there is no second home policy for replacement cost? I have a house in Currituck I could not sell. Market was bad, I decided to rent it. I have great renters, teacher and a sheriff's deputy, rent my house. Guy next door lives in his house year round. It's considered a second home. We pay the same premium, house is about the same, pay the same premium. We have flood loss, he has $20,000 in damage, I have $20,000 in damage. He's gonna get $20,000. I'm lucky if I get $6,000, $7,000, or $8,000 because a second home policyholder does not get replacement cost coverage. It's actual cash value coverage. So actually, all those people that have second homes, they're paying more. They're actually paying the same for less coverage, which in turn is paying more. So taxpayers are not subsidizing flood insurance for big second homes, vacation homes. Those owners actually pay more for coverage. And if they have a home that's worth more than $250,000, they have to go to the non-admitted market, the Lloyd's of London, to buy the excess flood coverage, which is not cheap. So let's end that myth. Taxpayers are not subsidizing flood insurance for big second homes. Taxpayers aren't subsidizing anything in the National Flood Insurance Program. You may have heard me mention earlier that the program is in debt. We have paid interest on that debt. Now, if the debt was written off and the interest was written off, then I would say that the taxpayers have subsidized NFIP policyholders. But we paid $900 million in 1 year in interest on debt to Katrina. That was from flood insurance policyholders. So that to me is not subsidized. That to me is not subsidized by taxpayers. FEMA, when they go in and they give assistance, and Joplin, Missouri had a tornado and a town is wiped out, and they come in and they help people and offer grants and low interest loans, that is subsidized by taxpayers. So, what do we got here? The definition of NFIP subsidy, I think I've made that point. I don't think it's subsidized. I think we need to stop using the term subsidized. There are policyholders that have received discounts. We were allowed to keep our policy zone and elevation because we built to the rules the government told us, so we don't feel that's subsidized. Congress was never shown the amount of additional premium revenue Biggert-Waters would generate. You would think that before this bill was passed, somebody would say, well, here's our study. Before Biggert-Waters, we're getting, this much in revenue, $3 billion in revenue, $3.5 billion in revenue and premiums. After Biggert-Waters, we're gonna get like $20 billion in revenue. Congress was never shown the impact of Biggert-Waters. They couldn't, because maps weren't even effective in communities, and they didn't know the impact. So our congressmen voted on a bill when they had no idea the additional premium, the additional burden it would put on middle-class mortgage holders. They had no idea it was going to cause this. Therefore, Maxine Waters came out and said, I had no idea. To my folks, I had no idea this was going to happen. This is a huge unintended consequence. I had no idea that I co-authored a bill that would force people into foreclosure and force families out of their homes. So she has worked very hard, once she figured it out, to try to get congressmen, representatives on board to look at some legislation to change this. Now, it'll be 2 years this July. This is how Congress is like, I feel like beating my head against the wall. How it is ridiculous that they have passed a law that can do this. And they know it's doing it now in places where flood maps have become effective. But yet, nothing has changed. Nothing has changed. So the ripple effect, like we talked about, lower market values, decreased local tax revenues. We're going to be a cash-only market, people. We're going to have people come in here, offer cash, and not have a flood insurance policy. So then we're having fewer policy holders in the National Flood Insurance Program, and it just gets better and better. So, bad bill. So next one. Okay, I like to show this picture. This is in Kill Devil Hills. It is one of those big, huge, oceanfront homes. You can only get $250,000 worth of coverage on that. Now look at that little teeny house next to it. You got the big daddy house and the little baby house. The little baby house has $250,000 worth of coverage, the same as the big house in the National Flood Insurance Program. So, again, doesn't matter how big your house is in the National Flood Insurance Program. Excellent. This is an older motor lodge on the beach road. The owner of this motor lodge called me and said, Willo, somebody told me that you're working on flood insurance, and I'm really concerned about what this is going to do to my business. And my advice was, well, the only thing you can do right now to find out what you're going to end up eventually paying, because pre-firm properties are seeing an increase of 25% a year on top of the increases yearly anyway, until they reach that actuarial risk rate. Well, how are you supposed to know what that is? So I said, tell them you're selling your property tomorrow, and the new owner wants to know how much you're going to have to pay for flood insurance. So it took a couple weeks. He pays $5,600 a year now. On this property, the flood insurance today in the zone he's in would be $55,000. So he said, what am I supposed to do? I said, well, you got a piece of land. So on a business that told me how much he grossed each year, he said, there is no way I can continue this business. So when you think of your older businesses here that have been here and family-owned businesses, think about that. Think about Manio. Think about some of these places that are really going to be impacted by this. There's no way you can raise that. Could he sell it? Well, yeah, but he's not going to get anything for the business. So that's where we're headed. Next one. Here's where we need you not only to do your homework on the homeowner's insurance. We have a homework sheet here on flood insurance. And I will tell you this. There were a couple bills introduced back in November. Senator Kay Hagan did come on board, and she was a co-sponsor of one of these bills. It went to the Senate. There was a motion made for it to at least be heard in the future. One senator opposed. All it took was one senator. It was pushed aside. So Senator Menendez from New Jersey said, not that easy. He came back with another bill. Senate 846 bill was introduced, I believe it was around December 13th. It is called the Homeowner Flood Insurance Affordability Act. What it says is those folks that were impacted by losing the grandfathering, this will delay any implementation of that provision that affects those post-firm homes for 4 years until what was mandated in the Biggert-Waters Act, the affordability study that was supposed to be done. Biggert-Waters mandated that FEMA do an affordability study. Well, they were able to implement provisions of the bill at their choosing, and they said, well, we didn't get funded for the affordability study, therefore we couldn't do it. So Congress finally, and Maxine Waters says, no. We need to stop the madness. What has already gone into effect for pre-firm properties, we can't change it. We're sorry. You got a pre-firm property, there's nothing we can do. But now that the maps aren't effective everywhere, we can change some of this. We can also say if you're going to buy a pre-firm property, you don't get hit with the big, huge increase all at once. You can take the 25% a year until you reach actuarial risk rates. What this will do, and this doesn't mean if this bill passes, we're waiting 4 years. It gives us 4 years. It gives us 4 years till the next reauthorization cycle in 2017. There are numbers here. A phone call is worth $1 million in this. If you could make the phone call, Richard Burr is standing behind his position on his support of Biggert-Waters. He said it's a fiscal issue. It is a budget issue. The program is broke. We understand that. We understand that there are flaws with the National Flood Insurance Program. We feel that it should not be the burden to fix this program on the backs of middle-class mortgage holders. So if you can just make a phone call to Richard Burr's office, to Senator Kay Hagan's office, and say, please support Senate Bill 1846, the Flood Insurance Affordability Act. I'm very concerned about the provisions of this bill and its impact. And then there's a little bit of a template there if you want to write an email. It takes you a couple extra steps to go through to get to that, but it is imperative that we let our voices be heard. We can't sit back on this one and let somebody else carry the water for us. We have got to all be involved. make a phone call. And as many people are in this room today, please, please, please make that phone call tomorrow. All right. Do your homework. Thank you very much. Report back.
Well, we'd like to thank you very, very much. We're glad that you are the watchdog on this insurance and not the rest of us. It's a rather complicated topic. Watch the newspaper. Willow might be available next month to give another presentation after the end of January.
Can I just say, I see a lot of friendly faces here. I would like to thank the elected officials that are here today. I saw folks from Duck Planning Department, Mayor Mag's Head, et cetera, here. Our president of the Home Builders is here. John, well, just handed the gavel over. John DuBois is here and some other members of the Home Builders and the Realtors. So thank you very much for allowing me to present this information to you this evening. Look forward to talking to you. Thanks.